गुड इवनिंग टू ऑल ऑफ यू। कैसे हैं सब लोग? टुडे वी आर गोइंग टू डिस्कस सेक्शन 18 रीड विद रूल मल्टीपल रूल्स वी आर गोइंग टू डिस्कस। So what is the section 18? Section 18 talk about ITC in case of special circumstances. ITC in case of special circumstances. Why they are saying in case of special circumstances? There is some logic. Normally we are claiming the ITC through GSTR 3B. But and we have discussed multiple conditions in that also. The there has to be the tax invoice, the goods and services has been received, the same should appear in that 2B. Multiple conditions we have discussed, and the recipient has filed the GSTR 3B. That particular part we have discussed in the section 16. So that is the normal circumstances. What is the meaning of special circumstances? That here you will take the ITC not through GSTR 3B, but certain ITC forms. ITC 01, ITC 02 or ITC 02A. Rafiq bhai, we will discuss. Rafiq bhai, Rafiq bhai, you have some doubt. We will discuss in some time. Let me complete the section 18 and then we have the doubt at the end of this particular webinar. Now, so section 18 talk about the multiple situation in which you are eligible to take the ITC, but not through 3B, through ITC forms. What are the circumstances? Circumstance number 1. That either you have taken the registration because you are mandatory, required to take registration in the GST, or clause B is talking about you have taken the registration voluntarily. What is the difference in mandatory, voluntarily? The next chapter we will discuss in detail. Section 22, 23, 24, 25 we are going to discuss in detail. Mandatory means one has to take registration. Voluntarily means one has optionally taken registration, not required by law, but he voluntarily taken the registration. After voluntarily person, after he take the registration, then he has to charge the GST on the outward supplies. What we are discussing? ITC in case of special circumstances. ITC in case of special circumstances. Clause A, we have discussed one who is required to take mandatory registration. Clause B, one who is required to take voluntarily registration. Clause C is talking about when one has shifted or switched over from section 10 to section 9. It means Mr. A is registered under composition levy and now he has shifted to the regular category. And the clause D, the supply was exempted in the GST, now it become taxable. There are the 4 circumstances ITC in case of the special circumstances. Section 18 subsection 1 talk about the 4 circumstances. Try to understand conceptually first, then we'll read the language. Subsection 1 clause A talk about if Mr. A required to take mandatory registration. If Mr. A required to mandatory registration, let's assume that Mr. A become liable to take registration on 1st of June 2022. This particular date is called as a date of liability. Mr. A, let's say turnover crossed the threshold limit or any of the situation covered in section 24. Mr. A need to take registration on or after this date. So I am saying this date is called as a date of liability. According to the respective provision in the GST under the registration chapter, one can make an application within 30 days. So let's say he has made an application on 25th June 2022. Is it okay? Answer is yes, perfectly okay, no problem. This is the date of application. And let's say on 1st July 2022, he has received the registration certificate in REG 06. What is the date of liability? The date on which Mr. A mandatorily required to take registration. Any of the provision of the GST, either section 22, crossing the threshold limit, or section 24, multiple reason. Now, if he crossed the threshold limit or any of the reason, he needed to take registration, then application has to be made within 30 days. Within 30 days. Actually, Mr. A has applied on 25th June. So there is no problem. He has made the application within time. Actual certificate has been granted by the GST department officer on the 1st July 2022. Now, what is the 18 subsection 1 talks about? 18 subsection 1 clause A says that whatever the stock lying on this date, 31st May 2022, whatever the stock lying on this date prior to the date of liability, a stock can be raw material, can be WIP, or can be finished goods. Whatever the stock lying in there, he would be able to take the ITC. Because on that day, whether he was registered person, you tell me on the 1st June 2022, whether Mr. A was registered person. What do you think? Whether the transaction was appearing in the GSTR 2B of the Mr. A, whether he has the proper tax invoice of B2B, you will say no sir, not at all, because he has received the GST number on 1st July. But 18(1) say if a person applied for registration within 30 days from the date on which he become liable and has been granted the certificate shall be entitled to take ITC immediately preceding the date from which he become liable to pay the tax under the provision of this act. For this, the form number is ITC 01. Where it is written in the rules, we will discuss. In the rules, we will discuss the number, form number, CS certificate, etc. He can take the ITC of stock and input contained in finished goods, semi-finished goods, or any raw material. Can he take the ITC of capital goods? Answer is no. Remember, in the 18 subsection 1 clause A and the clause B, you cannot take the ITC of the capital goods. Talking about the same example, let's say a person is not mandatorily required to take registration. He has taken voluntary registration. He has applied the registration on 25th June and the certificate has been granted on 1st July 2022. Clause B saying that a person shall be entitled to take the input tax credit immediately on the day immediately preceding the date of the certificate. So he has applied on 25th June. Certificate has been granted on 1st July. So on this date, 30th June, whatever the stock is lying, he would be able to take the ITC. The logic is very simple. Logic is very simple because on or after this date, he will pay the tax to the government. He will pay the GST to the government. And whatever the stock he has purchased the stock, but when he buys the stock, he won't be able to have GST number. Meaning thereby, why we are talking about ITC in case of the special circumstances? Why not normal circumstances? Why we are talking about special circumstances? Why not normal circumstances? The simple and one reason is, in the normal circumstances, when you are purchasing the goods, then at that time you are a registered person. But in the 18 subsection 1, they are talking about the ITC of the stock, and the day when you purchase the stock, either you are not registered or you are not eligible. Either you are not registered or you are not eligible to take the ITC. And therefore, they are saying this circumstances, ITC would be taken not through 3B, ITC would be taken through ITC forms. Concept is clear. Clause A and clause B is clear. Kindly confirm. Whether clause A and the clause B is clear, kindly confirm. Everyone is requested, please confirm that clause A and the clause B is clear to all. We are moving to the 18 subsection 1 clause C and the clause D. 18(1), we will talk total. We are talking about the 4 transactions. First, I am liable to take mandatory registration. Then whatever the stock lying on the hand when preceding the date of the liability. In case of the voluntary registration, 25(3) is what? Voluntary registration. I use section 25 subsection 3 says that if person like to take voluntary registration, then also he can obtain the registration even though he is not liable to take. Ankur, sure. Sushil Kumar Barik, which part is not clear? Both part is not clear. Let me explain once. We are talking about you have taken the registration because of mandatory registration. In the clause B, I have taken the registration voluntarily. In case of the mandatory registration, whatever the stock lying in the hand, which date? Date of liability. And here they are saying date of registration. What is the date of the day when I am required to take registration? Time limit to make the application for registration within 30 days. So they are saying because you will pay the tax from the date of the liability, so whatever the stock is there in your hand on the date of the liability, you are entitled to take ITC. Clause B is talking about if you have taken the registration voluntarily. Subsection 25 subsection 3 talk about the voluntary registration. So if I have taken the registration voluntarily, then whatever the stock lying in the hand on the day immediately preceding the grant of registration, so the day when the certificate is being granted, whatever the stock is there, I would be able to take ITC of that stock. Simple reason, when the stock has been purchased, at that time Mr. A, in my example, Mr. A was not registered person. Therefore, we are talking about ITC in case of special circumstances. Susil, kindly confirm. Mahadev, yes. Clause B, voluntarily on the, no, on the date of the grant of the certificate. So from same day by the person is also liable to pay the GST from the next day. Karthik, from the next day. That is the reason word preceding day is written. You are talking about the voluntarily? Yes. On the date of the grant of the registration, this is the date on which he is liable to pay the taxes. On or after this date, he is liable to pay the taxes. 18(1) clause C is talking about if I am registered, if Mr. A is registered under section 10 and he has switched over to the section 9, that is regular category. Saktivelan, I think you have joined late. Am I right? You have joined late. So I would request, I have already repeated 2 times. Considering the limitation of time, I request you, please watch the video again. No problem. If it's still not clear, in the next class you can ask, but at the end of the class. Okay. If I am registered under section 10, that is composition levy, tell me whether composition levy is eligible to take ITC or not. Whether composition levy is able to take ITC or not. If Mr. A is registered under composition levy, can he take the ITC? Would he be eligible to take the input tax credit? Answer is no. He won't be able to take ITC. No problem. Now he is switching over to the section 9, that is regular category. In the GST, there is a provision you can switch from the regular to the composition or composition to the regular. What is the restriction? What is the time limit? We will discuss in the subsequent chapter. But suppose Mr. A, who is registered under composition levy, he is not liable to pay. He is not liable to take input tax credit. Now he has switched over to the section 9. He will pay actual tax. Whatever the tax is applicable on the stock, he will pay actual tax. 18(1) he says whatever the stock lying on the day immediately preceding the date in which from which he become liable to pay the tax under section 9. Suppose he has converted on 20th July section 10 to section 9, then whatever the stock lying on 19th July at the end of the day, he would be able to take ITC through ITC 01. But the difference is in the clause A and in the clause B. We were talking about ITC of stock or input held in semi-finished goods or finished goods. But in the clause C and the clause D, this person would be able to take ITC of stock input contained in semi-finished, finished, and on capital goods also. On the day immediately preceding the date from which he become liable to pay the tax. Will he be able to take full ITC on his stock input semi-finished, finished goods? Yes, full ITC. What about the capital goods? Whether he would be able to take full ITC? No. In case of the capital goods, the credit shall be reduced by such percentage point as may be prescribed. Suppose there is an ITC of 10,000. GST on the capital goods is 10,000. Whether Mr. A would be able to take ITC of 10,000 full amount? No. The ITC of the 10,000 would be reduced, but how much percentage we will discuss in the route. Karthik, logic is very simple. logic is very simple, because if there is a raw material or semi-finished goods or finished goods, whatever the material is being converted, whatever the stock is being converted, I will pay that actual tax applicable on that stock. Whether I'm doing the manufacturing, then I will pay the applicable tax on finished goods, or if I'm doing the trading, I will pay the actual tax on that particular goods, which is lying in my hand on the preceding date. Because I become liable to pay the taxes, I am regular registered person, I will pay the actual tax. Government is saying, if that is GST paid stock, you can take the ITC. Is it clear? Kartik Gupta. I was talking about 18(1)(c). (18)(1)(c), repeating again, composition dealer converted into the regular dealer. Then the day preceding the date when he become regular dealer, whatever the stock lying in hand or input in semi-finished goods or finished goods plus capital goods or capital goods. But whether ITC would be available, full ITC would be available of the capital goods? No, sir. You need to reduce the percentage. How much you need to reduce the percentage, we'll discuss in the Rule 40 and the Rule 44. We'll discuss about the life of the capital goods. We will discuss about this reduction in the Rule 40 and 44. From charging date, section 10 to section 9, preceding date, he has to pay the taxes? No, sir. He has to pay the taxes. I have given the example. Let's say is converted from section 10 to section 9. Effective date is 20th July. Now he has to pay the taxes on or after 20th July. So whatever the stock lying in the hand at the end of 19th July, or I can say the opening balance on 20th of July, on which now he will pay the actual rate of the taxes. Therefore, 18(1)(c) says, if that stock is that input in the finished goods or semi-finished goods, if this contain any GST component, you can take the ITC. Somesh, Hitesh. Somesh's question is really good. In all such cases, whether I become ineligible or because my turnover is exceeded, or I have voluntarily opted out from composition to regular, or officer is coming and he is issuing the notice, and then I am converting from section 10 to section 9. In all three cases, you would be able to take ITC of the stock. For this, you need to refer Rule 5, Rule 6, Rule 7 of the CGST rule. On the raw material, yes. Is it covered in the semi-finished? Either stock, actually stock is there, whether it is a raw material or a finished goods, or input contained in semi-finished goods, let's say WIP, not completed fully not completed, but it is WIP or finished goods. So either it would be raw material or semi-finished goods or finished goods right now. Now, remember always, if there is a capital goods, would you be able to take full ITC? No, you have to reduce some percentage. What is the percentage? We'll discuss in the Rule 40, that is 5% per quarter. 5% per quarter. Pooja, now video is okay? Audio video is okay? 18(1)(d) we are talking about where an exempt supply become taxable supplies. Exempt supply become taxable supplies. The day when it become taxable, preceding that day, whatever the stock is there, input contained in semi-finished or finished goods is there, input contained in the semi-finished goods, that is WIP, or finished goods held in stock. So raw material, WIP, finished goods. And capital goods also. Which capital goods? If it is exclusively used for that exempted supplies, then you can take the ITC if the same is lying in your hand preceding the date from which it become taxable. Same concept. From 18th July, you all know na? Now, like atta, rice, pulses is become taxable. If it is a labeled and packaged, it become taxable from 18th July. Reduced percentage is 5%, but wait for some time. There is some point which we need to understand. Rule 40 versus Rule 44. Why on WIP ITC would be available? Because that WIP become finished goods when you are taxable person or when you are registered person, and you will pay the actual tax. So therefore they are saying if it is raw material, if it is WIP, or if it is finished goods, you can take the ITC. If exempt item become taxable item, then I can take the ITC of that stock or input contained in semi-finished goods or finished goods lying in the stock, like held in the stock. You can take the ITC plus capital goods, which is lying in your hand preceding the date in when it become taxable. Again, the same concept. Capital goods ITC, whether it will be fully available? Answer is no. Credit will be reduced by such percentage point as may be prescribed. Now read clause 2, subsection 2. Now read section 18, subsection 2, and give me the answer for this question. We all know from 18th July 2022, if any like rice, pulses, atta, etc. is labeled and packaged, it become taxable. So I am making the supplies of packaged and labeled item. Till 17th July, it was not taxable. From 18th July, it was taxable. There is a machinery which I am purchased, which I have already purchased on, let's say, 1st January 2021. I have purchased one plant and machinery for doing the manufacturing of these materials or these products. I had purchased the plant and machinery on 1st Jan 2021. It is lying in my stock. Can I take the ITC because now my output supply become taxable? You all read 18.2, then give the answer. I have purchased the plant and machinery on particular 1st Jan 2021. It is lying in the hand on 17th July. Prior to this date, when the item become taxable, earlier my product is exempted, now it become taxable. Therefore, I am talking about, will I be able to take the ITC of reduced by reducing certain percentage? That is okay. But would I be able to take the ITC of the plant and machinery, which was there in the hand on 17th July? Have you read, Sneha? Have you read this clause? Have you read this clause? What it is saying? 18.2 is saying you can take the ITC, whatever we have discussed in 18.1, but one problem, one time limit. The invoices should not be older than 1 year. A registered person not be entitled to take ITC after the expiry of the 1 year from the date of the issue of the tax invoice. When the invoice has been issued, 1st Jan 2022. So on or after 1st Jan 2020, sorry, yes, purchase the plant and machinery on 21. After the expiry of the 1 year, on or after this date, this particular person won't be able to take ITC, even though this is being covered in 18 subsection 1. Because 1 year is being expired. So always remember, this type of the date may come in the exams. This type of the date may come in the exams. So always remember, you can take the ITC, but only within a period of 1 year. Any doubt with respect to 18.1 you may ask, but now I am talking about 18 subsection 3. 18.3 is talking about, suppose there is a change in the constitution of a registered person, like on account of the sale, merger, demerger, amalgamation, lease, transfer of the business with the specific provision of the transfer of the liability shall be allowed to transfer the ITC which remain unutilized in his credit ledger. To whom he can transfer? To such sold, merged, demerged, amalgamated, leased, or transferred business in the manner as may be prescribed. Question number 1 to all of you: when Air India has sold the entire business to Tata, whether this transaction is taxable in the GST, whether on this sale Air India need to pay the GST on this sale. They have sold, and let's say 1,000 crore rupees is being received, 10,000 crore rupees is being received. I'm taking hypothetical amount, not exact amount. I'm just asking the question: when Air India has sold the entire business to Tata and receiving 10,000 crore rupees, whether Air India need to pay the GST on this 10,000 crore? The business has been transferred to from Air India to Tata, whether Air India need to pay the GST on this consideration. The answer is no. Why no? Because why no? Because why no? Because this is a transfer on a going concern basis. If the business is being any part or full is being transferred on a going concern basis, it is an exempt transaction in the GST, no requirement to pay the GST. Fine, no problem. Air India has transferred the business to the Tata. Air India not required to pay the GST. Now the question is, what happened to the ITC which is lying in the electronic credit ledger of Air India? Subsection 3 says it can be transferred through ITC 02 or ITC 02A. We will discuss the Rule 41 and Rule 41 capital A. But yes, this ITC can be transferred to the new entity. बहुत बढ़िया, very. Thank you so much. All has given the correct answer. All has given the correct answer. The GST won't be payable. Absolutely correct, because it is a going concern transfer. Whether the entire business or as a part thereof is being sold on a going concern basis, now the business would be continue. Instead of Air India, it will be in the hand of Tata. So they are saying this sale is not taxable. And also second benefit, whatever the ITC lying in the hand of Air India can be transferred through ITC 02. And there is one concept of 02A we will discuss in some time, Rule 41 capital. Now I am talking about the reverse situations. When you are registered under composition levy and converted into the regular, you can take the ITC, correct? Now you were dealing in the exempted supply, but now it become taxable supplies. You can take the ITC. This is by virtue of 18.1C and this is by virtue of 18.1D. For this, you need to fill the ITC 01 as prescribed in the Rule 40. What if the new entity is unregistered? Karthik, we will discuss section 22. Section 22 subsection 3 says that if it is being transferred, the new entity has to take mandatory registration. In the 22.3 and 22.4, we will discuss in such cases merger, amalgamation, demerger, reconstruction, or sold, the new entity, irrespective whether is liable to take registration or not, he has to take mandatory registration. Pooja and Karthik, I hope it is clear. Now, what is the electronic credit ledger? I use, see, let's say it is your passbook. In the GST, in the portal, there is two passbook belongs to you. One passbook ka name is called as a electronic cash ledger, and one passbook is called as an electronic credit ledger. What is that, sir? When you are filing the GSTR 3B, when you are filing the GSTR 3B, you are adding the ITC, correct? We have read the section 16, subsection 1, subsection 2, 17.5, etc. What is the eligible, net eligible ITC? You will add the same in 3B, and once you add the same in 3B, it will be credited to the electronic credit ledger. What is the cash ledger? If you pay the GST, amount in cash through PMT 06, it will be credited to your electronic cash ledger. This credit you can utilize toward the payment of taxes. Might be you require to pay, let's say, 10,000 rupees taxes. You can pay through credit ledger, you can pay through cash ledger. What is the method? What is the preference? What is the order? In the next class, we are going to discuss section 49. I hope it is clear. Ayush and Pooja. We are talking about, see, we are talking about, suppose I am registered under composition levy and I have converted into the regular scheme. As discussed in 18.1c, I would be able to take ITC. Or I am dealing in exempted item, this item become taxable. No problem, I can take the ITC. The only point I have to fill the ITC 01 within 30 days. Within 30 days. Now I am saying, if I am under regular, converted to the composition, or my transaction was taxable but now it become exempted, you tell me, will you take the ITC or will you you need to reverse the ITC? If you converted from regular to the composition, or you converted from, or your item become exempted, will you eligible to take the ITC on the stock, or will you reverse the ITC, whatever lying in there in your hand? You will take the ITC or will you reverse the ITC? Give me the answer. Will you take the ITC or will you reverse the ITC? The answer is I need to reverse the ITC. Because now, what is the logic? If regular dealer become composite dealer, then whatever the stock is there, he will pay the rate, not actual. He will pay only 1% or 5% or 6%. Similarly, if the item was taxable, now it become exempted, there is no GST on outward supplies. There is no GST on outward supply because the item now become exempted. So whatever the stock is there, which I will sell, I will not pay the GST. So the section 18 subsection 4 says you need to reverse the ITC, or you will pay the ITC. In both what I can say Mr. A will pay the same by way of the debit in the electronic credit ledger. Why he has to pay, that we have understood. Now we'll read the language. How much amount? Equivalent to. How much amount he need to pay? Equivalent to the credit of input tax in respect of input held in stock or semi-finished goods or finished goods and capital goods. And capital goods. He need to pay even on capital goods also. Who? When regular become composite or taxable become exempted, they need to pay. See, reversal of the ITC or need to pay, the things are almost equal. Now, in case of the capital goods, again, this concept is applicable reduced by such percentage point. So where we have discussed this particular part, let me write somewhere. In the section 18, subsection 1, clause C, we have discussed that you can take the ITC on capital goods, but reduced by certain percentage point. Similarly, in the clause D, we have discussed you can take the ITC on the capital goods, but it should be reduced certain percentage point. In 18 subsection 4, we are saying you will pay the ITC on capital goods, but it will be reduced by certain percentage point. Why I am writing here? Because when I will teach the rules, so we can again compare. In 18 subsection 1 clause A, please tell me in the clause B, can this person take the ITC, is eligible to take the ITC on the capital goods? Please confirm in the clause A and the clause B. What was the clause A and the clause B? Mandatory registration, voluntary registration. Whether in that case, the person is eligible to take the ITC on the capital goods. Whether that person is eligible to take the ITC on the capital goods. No, not eligible. Ankur is asking, but on purchase of the material before the goods are exempted from the tax, he has to pay the tax. Then why he not collect the ITC after the exemption? Because outward supply is exempted. If your outward supply, outward supply is exempted, even though I am paying the tax on my raw material, I have paid the tax on my packing material. But if my outward supply is exempted, this GST, whatever I have paid, it become cost. I won't be able to take ITC. Ankur, please confirm. Is it okay? So here I won't be able to take ITC on the capital goods perfectly. Clause C, clause D talking about ITC on the capital goods, but it should be reduced by certain percentage point. And in the 18.4, they are saying you can pay you have to pay the GST ITC equivalent to the ITC on the capital goods, but again reduced by certain percentage point. Going back to the study material, he shall pay an amount by way of the debit in cash or credit ledger reduced by such percentage point as may be prescribed on the day immediately preceding the date of exercising that option, or as the case may be, date of exemptions. So either I have converted from regular to the composition, then on the date of the conversion, whatever the capital goods is there, I will reduce the ITC. Whatever the capital goods is there, equivalent ITC, I will reduce by certain percentage point. Now the balance ITC, see, I have a stock on which I have paid 1000 rupees GST. Converting the number, entire 1000 need to be paid. Assume there is some raw material, there is some WIP, there is some finished goods. I will pay the actual GST. But if there is capital goods, there is some ITC which I have taken. Now that ITC reduced by certain percentage point, balance ITC you need to pay. Balance ITC you need to pay. Please note one thing, that 1 year ka concept is applicable on taking the ITC. 1 year ka concept which we have discussed in 18.2, on which you have given the reply also. You all have given the reply. 18.2 is restricting the tax invoice. You can take the ITC within a period of 1 year. Taking, there is a time limit, but reversing, there is no time limit. Even though the capital goods is being purchased 2 years back, if now I am converting myself into the composition, I have to pay certain portion of the ITC. Is it clear? If I buy a computer, will be able to claim ITC on it, sir? What is your output supply? Normally, yes. If it is a business use, I can take the ITC, no problem. There is no problem. Capital goods, what we are talking about, you can take the ITC. Computer, furniture, fan, air condition, almirah. For office purpose, I can take the ITC. There is a television, there is a projector. I can take the ITC of all these items. Suppose I'm providing the teaching and I'm using the digital pen. I have the digital writing pad. I can take the ITC on these items. I have the laptop for providing the teaching. I can take the ITC. So the point is that 1 year time limit is applicable in case of taking the ITC, but when you are reversing the ITC or paying the same, there is no requirement. There is no time limit, even though you are converting yourself into the composition, let's say after 2 years, 3 years, at that point of time also you need to pay the GST. Be careful about writing the language shall pay an amount, not write reversal, because language is also more important. So you will write shall pay an amount. Shall pay an amount. Fine. Amount of the credit under 1 and 4 shall be calculated in as may be prescribed. So we'll discuss the rules also. Very important. 18.6 is very important. See, in case of the supply of the capital goods or plant and machinery on which ITC has been taken, this particular condition is very, very important. In case of the supply of the capital goods or plant and machinery, which capital goods, which plant and machinery on which Mr. A has taken the ITC? The registered person shall pay the amount. The registered person shall pay the amount whichever is higher out of the two components. Registered person shall pay the amount equal to the ITC reduced by such percentage point as may be prescribed. ITC reduced by such percentage point as may be prescribed, or tax on transaction value. What is the section 15? Transaction value. Tax on transaction value, whichever is higher. Suppose I'm supplying the capital goods on current date. Normally we can say whenever we are doing the supply, we need to pay the GST on the transaction value. But 18.6 says that if you are supplying the capital goods or plant and machinery, every capital goods, every plant and machinery, no. Which capital goods, which plant and machinery on which ITC has been taken. In that case, registered person has to compare two value and higher of these two has to pay the GST. What is the two value? The first value is whatever the ITC he has taken on that capital goods or plant and machinery reduced by such percentage point as may be prescribed, we'll discuss, or tax on the transaction value. The transaction value which is being specified in section 15. Section 15 talk about amount paid or payable will be considered the value, but provided the recipient should not be the registered related person and the price should be the sole consideration. I am giving one numerical question to all of you. Please solve this question. The provision is in front of you. Let's say I have purchased one plant and machinery of rupees 1 lakh, on which I have taken the ITC. I am rounding it off so that it would be easy for our calculation. Actually, there is no GST rate of 20%. I have purchased on 1/1/2020. After 2 years, I have supplied this. I have sold this. I have sold this particular plant and machinery in say 15,000 and by charging the GST 1,500 or 3,000. My question is, when I am supplying after 2 years, this is my value on which I am supplying. Do I need to pay the GST of 3,000 or any other amount? Please confirm. Repeating the entire example once again. I hope it would be okay right now. Only slight internet problem is there. Repeating the example once again, the 1 lakh is the purchase price. I have paid the GST 20,000. So therefore, I have taken the ITC of 20,000. After 2 years, I have sold this capital goods, say in 15,000. I have sold this capital goods. In say, my view that I need to pay the GST at the rate of 20%, assuming the rate 3,000. Please confirm, do I need to pay 3,000 or any other amount? If yes, please calculate and give me the reply. I am giving you 2 minutes. What is the percentage point that may be reduced? 5% per quarter. For the time being, you will treat that 5% per quarter. But yet to explain, rule 40 will be have more clarity. But for the time being, to solve this particular problem, assume the percentage is 5% per quarter. Can anybody give me the answer that how much GST need to be paid by Mr. A considering the 18 subsection 6? Can you tell me? This question is clear to all? Because till now I have not received any reply. First, confirm whether question is clear to all. Kindly confirm. Let me repeat the question once again, last time. Mr. A has purchased the plant and machinery of rupees 1 lakh on which he has paid the GST and taken the ITC of 20. After 2 years, he is supplying this capital goods or plant and machine in 15,000. You need to calculate how much GST need to be paid. You need to calculate how much GST has to be paid by Mr. A on the sale of plant and machinery considering the 18 subsection 6. Great. Fine. Let me answer this question. First is, what is the ITC 20,000? Reduced by certain percentage, that is 5%. How much period this particular asset is being used by Mr. A? How much period the asset is being used by Mr. A? You will say 2 years. So 5% per quarter. For 1 year it is 5, 5, 5, 5, 20%. For 2 years it is 40%. I can say 20,000 minus 40%. So I can say that 12,000 is the balance amount, 6. Or tax on the transaction value. So what is the transaction value? 15,000. What is the rate? Hypothetically, I have assumed 20%. So the amount is 3,000. Whichever is higher, you need to pay the GST, that is 12,000. Is it clear? I hope you are all now have the clarity for 18.6. It's great that almost 4 or 5 participants has given the right answer. Very, very nice. Oh, all rather I am receiving more reply also regarding the 12,000. Susil, Raghavan, Sakti, I have to compare two value and whichever is higher that I need to pay. What is the logic? Now point is, what is the logic? Why they are doing so much typical calculation but only in the capital goods? Only in the capital goods. Why they are saying so? Why they are saying so? Now I am trying to explain the logic. If it is clear, kindly confirm. As per the rule 40 and rule 44, by rule 40 it is 5% per quarter, or rule 44 it is saying 5 years. The life of the capital goods is 5 years. The life of the capital goods is 5 years. So they are saying it should not be the case. It should not be the case that you are purchasing the capital goods at a higher value and selling at a lower value. They are insisting that asset has to be used for 5 years. If not, then you do the calculation, because we have given the life of the 5 year. We have given the life of the 5 year. It is not the case that you are purchasing and selling at a very reduced price, very nominal price. And even though you have not completed 5 years, in the GST, all capital goods has a similar life. It is not the different life for each capital goods. Like in the income tax we have, in the Companies Act we have. So they are saying if you purchase the capital goods, you should retain that for 5 years. If not, then you have to pay higher of the two amount. So Pooja, just to conclude your question, that unnecessary ITC should not be taken or should not be retained by the taxpayer or by the registered person. That could be the one of the logic. Is it clear? I hope. Is it clear? Kindly reconfirm. Now, very interesting point, but only for your understanding. Only for your understanding. One point only for your understanding. It will again clear your multiple doubts. If I am purchasing the capital goods or I am purchasing the plant and machinery, listen my question carefully and then give the reply. I am purchasing the capital goods, I am purchasing the plant and machinery. Can I have purchased in 1 lakh rupees on which I have paid the tax 20,000. Do I need to take mandatorily? 20,000 ITC immediately in the first year? Or I have the option that I can divide 20,000 into the 5 year, and on every year I will take the ITC of 444. This is option number A and this is option number B. Please give me the answer whether I have to mandatorily take the full ITC immediately in the first year, or I can apportion and take the 1/5 ITC in every year. If I am purchasing the capital goods and plant and machinery, we all know that life of the capital goods or plant and machinery in the GST is 5 years. Now my question is, do I have to mandatorily take the ITC immediately in the first year, or I have the option to stagger this, to divide this ITC in the 5 year and take 20% in each year? Do I have the option to divide the ITC in the 4 4 4 4 4 and total it is 20, or mandatorily I have to take the ITC 20,000 in the first year? Oh, Tanya, Hitesh, Raghavan, Bharat is saying option A is available. Let me listen the answer from majority of the participants, then I will give the reply. This option is not available. And reason, if I ask you, the reason is 16 subsection 4 of the CGST Act. Can anybody give the reply? Now, can anybody explain me what can be the reason? I am giving the answer and giving the hint. The answer is option A is not available and giving the hint 16.4. Can anybody frame? Can anybody give me the reply? Can anybody give me the reply? So this is the only option. Mandatory he has to take first year entire ITC. And if this asset is being sold prior to 5 years, then 18.6 would be applied. This option is not available, and why it is not available? One logic is 16.4. Can anybody try to link with 16.4? Why I am saying so? Why I am saying so that dividing or bifurcating in 5-year option is not available with me. We have discussed 16.4. Prabhas, Pooja, Somesh, Sneha, Purnima, Ayush. We have discussed, na? Sakti, Akash Neel, Sushil, Sneha, Karthik. Thank you so much. Because if ITC pertain to any financial year, let's say it is a 21-22. Let's say it is a 21-22. You can claim the ITC only till September after the end of the financial year. Maximum time limit is September after the end of the year. So think about next year, think about third year, think about fourth year, think about fifth year. Can you claim the ITC of this document? No. There is a cutoff date, there is a time limit. 16.4 says that if you purchase any goods or services, let's say which pertain to any financial year, you can claim on due date after the end of the financial year till September, or annual return, whichever is earlier. Not because of the depreciation. That was 16.3. I am talking about the time limit to take the ITC. Absolutely correct. So majority of the participant knows the answer. Is it okay? Now you got the clarity, more clarity with respect to this question. Can you take the ITC or can you divide the ITC? Out of these two options, I do not have the option to divide the ITC. Mandatorily, I have to take in first year. I hope it is clear. Kindly confirm. Here I am also writing 18 subsection 6. Here I am also writing 18 subsection 6 because here also we have discussed reduced by certain percentage point. Correct, na? Great. You have understood. That's great. Now 18.1 clause C, clause D, 18.4 and 18.6. In all these provisions we have discussed reduced by certain percentage point. What is the percentage point that we are discussing? Because there is a conflict or because there is some confusion between rule 40 and rule 44. This you should understand, and you may expect one question, maybe short or maybe longer, but you can understand and try to have the clarity on these two rules and what is the problems. Rule 40 sub rule 1 simply says that ITC claim in 18.1 in clause C and the clause D shall be subject to the following condition. What is the condition? It says that it should be reduced by certain percentage point. And what is the percentage point? 5% per quarter. 5% per quarter or part thereof, or part thereof from the date of invoice or such other document on which capital goods were received. So just I am writing here in the particular my whiteboard, I'm just writing 5% per quarter or part thereof, or part from date of invoice. Just I am summarizing, then I will explain problem and everything. This is very simple. It says that within 30 days you need to file the ITC. So fine, no problem. The time limit can be extended by the commissioner of the state or UTGST. That is okay. That you have to specify the stock which is lying on the immediate clause for 18.1A, 18.1B, 18.1C, whatever the date we have discussed. We have discussed the date. In case of the mandatory registration, what is the date? The preceding the day on date of liability. 18.1B, we have discussed what is the date? Date on the grant of the certificate, preceding date. 18.1C, 18.1D, the date on which you have taken the, or you have converted into the section 9. 18.1D, we have discussed that item become taxable on the preceding day. I am eligible to take the ITC. So whatever the forms which you are filing in the clause B, the forms which you are filing in the clause B shall clearly specify the details relating to the stock. That's it. Okay, that is also simple, no problem. Now they are saying the form 2 lakh, then you have to take certificate. If the ITC ka value, if the ITC ka value is more than 2 lakh, then if ITC ka value is more than 2 lakh, then obtain the certificate. So if you are converting from composition to regular, or you are exempting item become taxable, then the ITC will be verified by these forms. So that is okay. Now again, rule 40 sub rule 2 saying, rule 40 sub rule 2 say amount of the credit in case of the supply of the capital goods or plant and machinery for the purpose of 18.6 shall be calculated by reducing 5% per quarter or part thereof. Here also same thing is written, 5% per quarter or part thereof. Sometime facing the audio problem. I hope now it is okay now. I will repeat this particular part. We have completed the rule 40. What we have discussed, that we have talked about, now you can take the ITC of the capital goods by reducing certain percentage point. How much I have to reduce? 5% per quarter or part thereof. Same things is being applicable for 18.6. Same thing is applicable for 18.6. They are saying 5% per quarter or part thereof. Rule 40 is completed. Rule 40 is completed. Now I am switching to the rule 44. I am switching to the rule 44. In between I'm leaving two rules, 41 and 41A. We will discuss after the break. But let me discuss 44. amount of the ITC relating to the input held in stock, input contained in the semi-finished goods or the finished goods. Amount of the ITC relating to the input held in semi-finished goods, capital goods held in the stock. What is the 29.5? Cancellation of registration. Cancellation of registration. What is the 18.4? What is the 18.4? Registered person, regular category, is converted into the composition. Taxable item become exempted item. 1 minute. One minute, please. So probably now you will not face any problem, I think. Let me share the screen once again. First, talking about the rule 44. In the rule 44, that it is applicable in 18.4 and 29.5. 18.4, regular become composition dealer, or exempt taxable item become exempted item. You need to pay certain input tax credit. And 29.5 is also talking about cancellation of registration. Situation are same. Input held in stock or capital goods is there, that is okay. The amount would be calculated or determined separately for CGST, for SGST, for UTGST, for IGST. If suppose invoice are not available, see, invoice are not available because you need to pay the GST, you need to pay the ITC, and invoice are not available, then you need to take the prevailing market price, and for which you need to obtain the CA certificate. Which form need to be filed? ITC 03 or GSTR 10. ITC 03 is applicable for section 18 subsection 4. GSTR 10 is applicable for section 29 subsection 5. What is section 29.5? In case of the cancellation of registration, GSTR 10, that is final return, has to be furnished. In case of the 18.4, if ITC need to be paid because of the 18.4, what is the 18.4? Composition, regular become composite dealer, or taxable item become exempted item. You need to pay certain ITC, certain input tax. What is the form number? That is ITC 03. Amount determined tax liability and the details shall be furnished in ITC 03 or in GSTR 10. Going back to the 18.1, rule 44 sub rule 1, input held in stock, input contained in semi-finished on the basis of the corresponding invoice on which credit had been availed. What about the capital goods? The capital goods held in the stock, the input tax credit involved for the remaining useful life in month. Very, very important point. It means, for example, I have used the asset for 4 years. 6 months, 15 days. This is the example used in the material study notes. I've used 4 years, 6 months and 15 days. What is the remaining useful life? I can say 5 months. I like to make comparison of the rule 40 versus rule 44. Rule 40 says 5% per quarter. 5% per quarter. But rule 44 says that you will take the remaining useful life. You will take the remaining useful life, that is in full month. Still, I have not applied. I'm just trying to read and explain the provision. After that, I will apply in one calculation and tell you what is the problem or how the amount can be different. Just wait for a couple of minutes. So in case of the capital goods, in the rule 40, we have discussed 5% per quarter. Whereas in the rule 44, they are saying you need to calculate the remaining useful life in full month shall be computed on pro rata basis, and what is the life of the capital goods, that is 5 years. Still video is lagging. Ram sir, is there any problem in video audio? एक मिनट दीजिएगा, एक बार वो खाली बीच में ऐसा करते हैं. सो ब्रेक ले लेते हैं. सो लेट मी टेक ए ब्रेक ऑफ 5 minutes, sorry 10 minutes. We will resume at 7:25. We will resume at 7:25 and then we'll start again. Whatever I have discussed, I will start again. So, Muhammad Taqif, you have asked one question. What is the meaning of pro rata? I will explain again the entire rule 44 because there is some problem in video or audio you are saying. I will repeat once again. So rest to be sure, whatever we have discussed, that will be repeated. Giving the one example by which I like to explain the word of pro rata. Capital goods have been used for how many period? 4 years, 6 months and 15 days. 4 years, 6 months and 15 days. So I can say, according to the rule 44, what is the remaining life? What is the useful life remaining? You can say 5 months completed plus balance 15 days, correct? For the purpose of the rule 44, you will take completed month. You will not take any part thereof. So meaning thereby, for the application of the rule 44, I will say the remaining life is 5 months. Let's say ITC taken on capital goods is say 20,000. ITC taken on the capital goods is say 20,000. I will say 20,000 multiplied by 5 divided by 60 months. What is that? ITC which is belonging to the remaining useful life. ITC which belongs to the remaining useful life. What to do of that remaining useful life? Where we have discussed this particular provision, 18 subsection 6 or 18 subsection 4, you need to pay the GST. You need to pay the GST. What was the 18.4? If Mr. A has converted from regular to the composition, or his supply become exempted now, from taxable to exempted, now we need to pay the GST. How much GST need to be paid? That is pro rata in case of the capital goods. And for capital goods, they are assuming life is 5 years, that is 60 months. For the remaining life, they need to pay the GST. How to calculate the remaining life? In the completed month. So I can say this would be the formula. Is it clear to everyone? Please confirm the 44, the total life 60 months and the remaining life 5 months. How to calculate the ITC to be payable? That is being calculated on pro rata. Is it clear to all? Kindly confirm. I am waiting for the confirmation of all. Just quickly confirm, is this part clear to all? Now the rule 44, we have discussed sub rule 1 and how to calculate. We have also discussed with the practical example. This mode of reversal, how to do the reverse? Either through ITC 03, the payment will be made through ITC 03 in case of the 18.4, or it can be through GSTR 10. What is the GSTR 10? Final return in case of the cancellation of registration. And in case we are taking the market value, it should be certified by a chartered accountant. Now we are talking about rule 44 sub rule 6. Amount of the ITC for the purpose of, if the ITC has not been availed due to any reason, then obviously section 18 will not be applied. So if you have not taken the ITC, then there is no requirement of reversal, or then there is no requirement of pro rata basis payment. What was the 18.6? What was the 18.6? 18.6 if we are supplying the capital goods. What was the 18.6? It was supplying the capital goods or plant and machinery. In that case, in case of the capital goods, we need to pay. How much we need to pay? They are saying that relating to the capital goods shall be determined in the manner as we discussed in the clause B. In the same manner which we have discussed. So the life would be used as a 5-year, and the remaining life, that is in completed month, in completed full month, would be taken, and pro rata basis, in the proportionate basis, you will calculate the amount that you need to pay. (18 subsection 6). I'm reading once again because there is one catch. There is one catch which you all need to understand. In case of the capital goods or plant and machinery on which ITC has been taken, the registered person shall pay amount equal to the ITC taken reduced by percentage point. Here I can say the rule 40 or rule 44. There can be difference in both the amount. Do you agree with this? Why I am saying that rule 40 says 5% per quarter or part thereof, reduced by percentage point. Reduced by percentage point. If I will apply the rule 40, it says 5% per quarter or part thereof. And if I will apply the rule 44, its sub rule 6 says that you will calculate by assuming 5 years and remaining life in completed month. That is, in our example, it was 5 months. There may be the difference. There may be the difference in the value. In that case, if there is a difference, what to do? If there is a difference, what to do? Coming back to the example. Suppose I am taking again this example. Yes, Prabhas, I am taking one example. Let's say the ITC amount, I am saying 60,000. Again, I am taking the higher amount so that it would be easy for us to calculation. I am saying 18 subsection 6. Sneha, I am again repeating, but this time I am doing the comparison. I hope it would be clear. Kindly confirm if that after that also it is not clear. I will repeat again. I am doing one comparison. Suppose I am supplying the capital goods or plant and machinery, let's say after certain period of the time. What is the time? 4 years, 6 months and 15 days. What is the time? 4 years, 6 months and 15 days. I have used the capital asset for that particular period. How much tax I need to pay, that part I am calculating. If I will apply the rule 40 or if I will apply the rule 44, per quarter or part, I have used 6 months, 15 days. How many quarter is there? For 4 year, I can say 16 quarter. For 6 months, I can say 2 quarter. And for 15 days, I can say 1 quarter or part thereof, 1 quarter. Total, how many quarter I have used? I can say 19 quarter I have used. Total 19 quarter I have used. So I need to pay how much? Only for 1 quarter. Let's say I am assuming 60,000 is the ITC availed. How much I need to pay? Only 5%. So that is 3,000. Rule 40 is clear to all, kindly confirm, then I will switch to the rule 44. Rule 40 is clear to all, then I will switch to the rule 44. How much I have to pay? The total ITC reduced by certain percentage point for a 5% per quarter or part thereof. I will reduce for 19 quarter, meaning thereby I have to pay for 1 quarter. What is the 1 quarter? 5%. The amount is coming as 3,000. Is rule 40 clear? Confirm. Then I will switch to the rule 44, which is written in the study material. So if I will apply the rule 44, excellent. Sneha Sharma, you are saying is it clear? Kind. Now see the rule 44 because you have raised the concern. In the rule 44, how we are what we are assuming life as 5 years, that is 60 months. What is the remaining life? Remaining life is completed month. See, the total life is 5 months, 15 days, but I will say the remaining life is 5 months. So how much? I 60 multiplied by 5. I can say this amount would come 5,000. If I will apply the rule 44, how much amount I need to pay? 5,000. If I apply the rule 40, how much amount I need to pay? 3,000. Are you able to understand that amount can be different? Amount can be different, and if it is different, what to do? And if it is different, what to do? Underline this particular sentence. Underline this particular sentence. Higher of the two amount is finally paid by the registered person. If in 18.4 it can be possible, in 18.6 it can be possible. So higher of the amount you will pay to the government. It means 3,000 or 5,000 higher will be paid. Kindly confirm this particular part is clear to all. I hope this particular part is clear to all. Clear? Now let's move to the rule 41. Let's move to the rule 41. What is the rule 41? It is applicable for section 18. It is applicable for section 18 subsection 3. What we have discussed in 18.3? Sale, merger, amalgamation, demerger, etc. So in the event of the sale, merger, demerger, amalgamation, lease, transfer, the change in the ownership of the business for any reason. For this, there is one circular 96. Circular 96 in case of the death of the person. Suppose Mr. A was doing the business and he has expired. Now his son like to continue that business. The circular 96 has clarified that ownership has been transferred for any reason, include the death of the proprietor. So in that case, sale, merger, demerger, amalgamation, what to do? ITC would be transferred through ITC 02. New entity will take the ITC. Transferor will file the ITC 02. New entity will take the ITC. This transfer would be in the ratio of the value of the asset. See, if the entire business is not being transferred, only part has been transferred. So how the value will be determined, which is to be transferred? The value will be determined according to the value of asset. One more part, value of the asset, whether you will calculate the asset on which ITC has been taken or total asset. The value of the asset means the value of the entire asset. Whether you have taken the ITC or not taken the ITC doesn't matter. You are calculating you are calculating the value to be transferred for ITC 02. You are calculating the ITC to be transferred. But in the calculation, you will apportion in the ratio of the total asset and asset which is being transferred. In that, you will consider entire asset, whether you have taken the ITC or not taken the ITC. Certificate of chartered accountant or cost accountant is required if the business has been transferred within a specific provision of transfer of liability. Once the ITC 02B, ITC 02 is to be furnished by the, let's say, Mr. A, Air India, and it will be accepted by Tata. Once the Tata will be accepted on the common portal, all the ITC which is being transferred will be added to the or will be credited to the electronic credit ledger. Rule 41A, same if there is a one entity. There is a one entity, let's say XYZ Limited, has taken one registration in Haryana. Now they like to take second registration in Haryana. Either they can add as an additional place of the business in the existing number, or they have the option to take a new registration within the same state. If new registration has been obtained within the state by the same organization within the state, new registration has been obtained, then again rule 41A says you can transfer the ITC through ITC 02 capital. Again, the same concept. What is the value of the asset? Means entire asset. The new registered person shall on the common portal accept ITC 02A. Once it will be accepted, amount will be credited in the electronic credit ledger. So far, any question so far? We have completed section 18. We have completed section 18. So one request to all the participants, in the last class of the ITC, the next class on the Friday, that would be the last class of ITC. So please revise the entire provision of the ITC. We'll have some case study, we'll have some practical example which we will solve in the class. And if you participate, if you give the reply, there would be the confirmation to me the concept is clear. Rule 44 we have discussed. Now I have discussed the comparison. Any question? I am waiting for your any question for on section 18. If there is any question, please let me know. So this particular all the point I will again revise, but in the last quick round of question. So this particular circular which I was talking about, circular 96. So transfer of the ITC on account of the change in the constitution of registered person. Here they are saying in case of the sale, merger, demerger, amalgamation, transfer or change the ownership of the business. They are saying circular 96 has clarified the transfer of the change in the ownership is include the due to the death of the sole proprietor. So proprietor has been expired. Now Mr. B is continue, his son is continuing that business. It will also be considered as sale of business, and the person who is Mr. A can his legal heir can file the ITC 02 and his ITC 02. It will be added in the son's all the section. For example, whatever we are discussing, that is nothing but the analysis. See, I am not teaching line by line. Whatever we are discussing after the provision, taking the example, what we are doing the analysis, and almost same point you will find, or maybe different, but the concept is same. You must read, otherwise you won't be able to understand the provision entirely. Why we are taking one question for 15 days, one quarter for 15 days? Okay, no problem. Raghavan, so 18 subsection 4 or 18 subsection 6 says that let move to the 18.4 and 18.6. Let's move to that particular 18.4 or 18.6. Suppose I am saying that I have supplied the capital goods. Let's say why there is 1 quarter. In case of the capital goods is being supplied on which ITC has been taken. So let's say I have purchased the capital goods and I have sold after 4 year, 4 year, 6 months and 15 days. Correct? So they are saying in case of the supply of the capital goods on which ITC has been taken, registered person shall pay the amount equal to the ITC. How much was the ITC? 60,000. Reduced by, so I am saying minus such percentage point as may be prescribed. How much percentage point we have discussed in the rule 40? 5% per quarter. How many quarter we have used? I am saying 19 quarter. 4 year, that is 1 year. How much quarter is there? 4 quarter. So 4 year, I am saying 16 quarter plus for 6 months. There is 2 quarter and any part thereof there is 1 quarter. So effectively I can say I have used the asset for 19 quarter. So therefore I can say I will reduce 19 quarter, that is 5%. So balance would be, so 19 multiplied by 5, you can say 95. So you will reduce 95%. So balance would be 5%, that is 3,000. Is it clear? Is it clear? This part is clear or not? Sneha, I will explain what is the electronic credit ledger. Rafiq bhai, I am not clear on the death provision. Fine. How to calculate the ITC as per the provision of the rule 44 1 and clause A. Clause A is, will explain. Will explain with the help of example. No problem. So Raghavan, kindly confirm. Is 1 quarter, how the 1 quarter is coming? So I am saying that I have used the asset for 19 quarter. So the balance 1 quarter is there. So therefore I can say I need to pay 5%. I need to pay 5%. Perfect. Now I am saying electronic credit ledger means it is a passbook in the GST. It is a, you are having two bank account in the GST. So I am trying to explain just in the layman language so that we can understand. There is two bank account in your GST. The name is electronic cash ledger and electronic credit ledger. Cash ledger means whatever the amount we are paying through PMT 06. PMT 06 is a challan. The taxes which we are paying, the GST which we are paying through PMT 06, it will be added. It will be credited in the cash ledger, electronic cash ledger. And when we are filing the GSTR 3B by reporting the ITC, whatever we discussed, so that will be credited to the electronic credit ledger. So you have the credit balance. You have the credit balance in these ledger, which you can use for payment of the taxes. So electronic credit ledger, when you are filing the GSTR 3B or you are filing these form ITC 01, ITC 02, ITC 02A. So the amount of the ITC will be added in your electronic credit ledger. So what to do? You can use for payment of the taxes. Is it clear? Kindly confirm. Sneha Sharma. Now moving to the question of Menon Rafiq bhai. I am not clear about the death provisions. Fine. Kindly confirm. Sneha, kindly confirm so that I can move to the question of Rafiq bhai. See, if I read 18 subsection 3, or if I read section 18 subsection 3, what is the concept? 18.3 says that in case of the sale, merger, amalgamation, demerger, transfer of the business, etc., you will transfer the ITC through ITC 02. You will transfer the ITC through ITC 02. This sale is not taxable in the GST, and you are allowed to transfer the ITC in the ITC 02A. They are saying change of the ownership. Change of the ownership. Correct. Here is, they have used one word. Transfer of the business, the said on account of the sale, merger, amalgamation, transfer of the business. So, will that particular part which we are discussing, in case of the death of the proprietor, so Mr. A, who is doing the business, he has expired. Now Mr. B like to continue that business. His son like to continue that business. Is it a sale, transfer of the business, ownership, etc.? Yes. Circular 96 says, yes, in case of the death of the sale of the sole proprietor, it will be considered as, in case of the death of the sole proprietor, A is expired, B continue that business. It will be considered the change of the ownership, and here you can take the benefit of 18.3. What is the benefit? ITC lying in the hand of A's account can be transferred to B's GST number. Is it okay? Rafiq Manan, Rafiq bhai, Mamam Rafiq bhai, kindly confirm. Even if it is one day, the provision would be same. Even if it is one day, the provision would be same. Provision would be same. So if you have used for one day, it means you have used for 1 quarter. You have used for 1 quarter. And if I will apply the rule 44, it will say that you have used for 1 month. Correct? Huh? So for rule 40, one day, if I'm using one day, it is being, you understand that I used for 1 quarter, and in the rule 44, it is assumed that I used for 1 month. Next question, how to calculate, Akasni, how to calculate the ITC as per the 44.1A. 44.1A is very simple. You have the stock or I input in finished goods, the ITC shall be calculated proportionately on the basis of the corresponding invoice. Suppose you have the purchase the quantity 1000 and on which there is an ITC of 10 lakh rupees or 1 lakh rupees. Now the closing balance of the quantity is 100. You will calculate proportionately. It means the total ITC is of 1 lakh on how much quantity? 1000 quantity. How much quantity remaining? Quantity remaining is 50. You will calculate proportionately, and whatever the ITC is available, that's it. That you need to reverse or you need to pay. Simple, na? In the capital goods, there is some problem. Why? I have explained 4 year, 6 months, 15 days. Now, how many months are remaining in full? That is 5 months. And accordingly, you will calculate proportionately ITC multiplied by 5 months divided by 60 months. Akasni, is it okay? Now, fine. Now I will explain one part which I have not explained yesterday. There is a reference of the circular 72. I am explaining right now in crux, but you can read in detail. What is the circular 72? So there are two more circular reference, circular 92, which we have discussed yesterday, but in the last class, not yesterday. But we have not discussed this circular 72. Circular 72 is applicable for the time expired medicine. It means, suppose I am manufacturing and Mr. A is a manufacturer and Mr. B is a stockist or dealer of that medicine. Now A has supplied the medicine on the tax invoice. Now this medicine become time expired or valid or expiry date is crossed. Now that medicine cannot be used. It has to be returned. Correct. Now, what is the process? What is the process that I'm explaining? The process is first it is saying that see A is supplying the goods to B. Now the B is returning the same to A. Who will issue which document? Kindly tell me. Normal, I'm asking the normal question. In case of the sales return, who will issue which document in the GST? Kindly tell me. Very important question. A is supplying the goods to B and now the B is returning the goods to A. It is a sales return. Whatever the A has sold, it is being returned by customer. Now tell me which document will be issued, name and which person. Who will issue the document and what could be the name of the document? Who will issue the document and what is the name of that document? Two things are important. Give me the answer. Who will issue the document? What is the name of the document? Waiting for your reply. The answer is according to the GST, the supplier has to issue the credit note. If you refer the section 34 subsection 1 or 34 subsection 3, if you refer the section 34 subsection 1, it says that supplier will issue the credit note, or 34.3 say supplier will issue the debit note. You are saying that B will issue the debit note in the GST? No, sir. No. B will, for the accounting purpose, might be the B is making the debit note. That is okay. But once you will say the debit note in the GST, that will be wrong. Because section 34 says credit note or debit note can only be issued by the supplier. Remember always, here B is the recipient. He cannot issue the debit note. Whether he is the supplier, no, then B cannot issue the debit note or credit note. Circular 72 has given the one another angle for this transaction. Now, when B returning the time expired medicine to A, B can treat the same as a fresh supply. B can treat the same as a fresh supply. And if he is treating the fresh supply, B will issue the tax invoice on A. This particular circular is saying, circular 72 is saying, time expired medicine can be treated. Time expired medicine can be treated as a fresh supply. And if it is treated as a fresh supply, the B will issue the tax invoice. B will issue the tax invoice. So they can treat the same as a fresh supply and thereby issuing the invoice for the same. The value of the goods as shown in the invoice, the wholesaler or the manufacturer can avail the ITC. So B has returned the goods to A. By issuing the tax invoice, A can avail that ITC. Is that part is clear? What is the difference? We'll discuss in the invoice accounts. We have the different chapter. We will discuss over there. So one simple answer, debit note, I'm increasing the value. Credit note, I'm decreasing the value. Debit note, I'm increasing the value, and credit note, I'm decreasing the value. I am A, you are B. I have supplied the goods. Now the goods is being returned. I need to decrease the value. So normally A will issue the credit note. Suppose I have made the invoice of 100 quantity, but the actual quantity was 105. So I will issue the debit note for 5 quantity because I need to increase the value. Next point. Ultimately, the wholesaler or the manufacturer, he will destroy that particular medicine. whatever the ITC he availed on that tax invoice will be reversed according to the block credit we have discussed 17.5H. Third point, that's only this point. Fine. So you can say that time expired medicine can be written by either A will issue the credit note, or second way, B can issue the same as a fresh tax invoice. And when manufacturer ultimately destroy, he will reverse the ITC according to 17.5H. Now let's move the section 49. Let's move to the, before moving, let's do one or two questions. Section 49 we will start in the next class, not now, because it is long discussion. It will take at least 1.5 hours. So we will do this section 49. We will do in the next class. But let me take certain examples. ABC company registered under GST is engaged in the manufacturing of heavy machinery. It procured the following item during the month of the July. Determine the amount of the ITC available with ABC company for the month of the July by giving the necessary explanation for treatment of the various items subject to the information given above. Assume that all other conditions necessary for availing the ITC has been fulfilled. Now, please give the answer for point number 1. Can we ask the doubt of the previous topic? Yes, definitely you can ask. Karthik, I think you have asked one doubt. You can ask. I will give the reply at 8:20. Definitely I will give the reply. So I think, is it the same question which you asked in the last class? 16 subsection 3, 16 subsection 2 third proviso, and there is one doubt with respect to the, I think, rule 36. Please give me the answer for serial number 1, electrical transformer to be used in the manufacturing process, whether ITC would be available or not. ITC would be available or not? Answer would be ITC would be available. Answer would be ITC would be available. Truck used for the transportation of raw material 1 lakh, whether ITC would be available? While giving the reply, please say you are giving the answer for serial number 2. Serial number 2, yes or no? Serial number 2, yes or no? Sneha Sharma, absolutely, because it is business use. You have to give the remarks also, na? See, you have to give the remarks. So kindly not say, kindly not say yes or no. Please give the explanation, some sort of the explanation that why the ITC would be available. What you will write that explanation in the exams? What explanation you will write in the exams? Suppose the question is truck used for the transportation of raw material, ITC would be available or not, along with reasoning. ITC would be available or not, along with reasoning. Any reason? Any reason why the ITC would be available for the truck used for the transportation of raw material? ITC would be available because it is a motor vehicle used for transportation of goods, and the block credit 17.5A blocking the credit only for the transportation of passenger. Transportation of persons, not the transportation of goods. So ITC would be available. Next, raw material, whether ITC would be available. Raw material, whether ITC would be available. Somesh, truck is also a motor vehicle. Please note one thing, truck is also a motor vehicle. There is no motor car. In the 17.5A, the word motor car is not used. The word motor vehicle is used. So Whether truck is a motor vehicle, 100% yes. Why the ITC would be available? Because the blockage in the 17.5, the blocking is on the transportation of person, not the transportation of goods. We had a lot of example on that day. Prabhas, again, if I purchase the truck, will I not capitalize that asset? Prabhas, you have given very good answer. Within that, there is a one question. Thank you so much for giving this reasoning, because it clarified the doubt of all. If I purchase the truck, will I capitalize or charge to the profit and loss account? I definitely capitalize. So if I will capitalize, is there any problem in the ITC? See, I am purchasing the truck. If I will capitalize, is there any problem in the ITC? If I will capitalize, is there any problem in the ITC? The answer is no. Why no? Let me explain in short once again. Please note one thing. We are talking about clause A. We are talking about the clause AA. The capitalization, capitalize, not capitalize, that belongs to clause C and the clause D. Clause C, work contract service, and clause D, with respect to goods and services for construction of an immovable property. Here we have discussed if capitalized, ITC not available, but we have discussed for the clause C and B, and right now we are talking about the truck which is covered in the clause A. Karthik, again you are giving the wrong reasoning. I can avail the ITC if I am not claiming the depreciation on the GST part. And this, absolutely correct. Karthik, because you have the question on the 16.3, I will explain after the discussion of this question number 1. Once we complete the question, then we'll come out your doubt, and then after that, last 10 minutes, quick round of the question and answer. Raw material ITC would be available as it is in furtherance of the business. Confectionery items, the item was supplied free of cost to the customer in a customer meet organized by the company. Will the ITC be available? Reason. So reason is important. The reason is important. See, you all will say no, that is okay, but why no? You all will say no, that is okay, but why no? Reasoning is important. Waiting for your answer. What is the reason why ITC would be available or why ITC would not be available? Because ITC is blocked. The correct answer is ITC is blocked in 17 subsection 5 clause H. So therefore you cannot take the ITC. So you have to write section 17 subsection 5. You have to write 17 subsection 5. बहुत बढ़िया. Very nice answer, Karthik. Not available, it comes under food. Absolutely correct. And it is not obligatory. That is also correct. Outward supply not taxable. That is also correct. And you can also say assume that suppose it is the business of that company, then also it is being supplied free of cost. So you can say it is covered in 17.5b. All the reasoning of Karthik is correct. And if I assume it is an inventory, then also it is not eligible because of 17.5h. Somesh, absolutely correct. It is free of cost, no consideration. Therefore, it is not a supply, so not eligible for ITC. See, all these reasoning should come into the exam paper, sir. Must come. Then only you will get the good score. Thank you so much, Sneha, for your appreciation. Great. Wow. Free sample. Great. Akash Neil. Purnima ITC available if output separate taxable. बहुत बढ़िया. Very nice. We all given the correct answer. Now, Karthik, can you please write the doubt? Can you please write your doubt? I think anyone has the doubt with respect to ITC chapter on any provision. I have the 5 minute extra. I have the 5 minute only. I will explain. First doubt you are asking on 16 subsection 3. See, if I have purchased the machine, computer, anything, say let's say value is 10 lakh and GST is 1 lakh. Here we are talking about ITC available, not available. We are talking about only 1 lakh. See, whether depreciation, non-depreciation, ITC, non-ITC, we are talking about only GST part. One thing is clear, there is no problem in taking the depreciation on 10 lakh. There is no problem in taking the depreciation on 10 lakh. Now for 1 lakh, you have the two options. See, you will capitalize how much? You will capitalize when you purchase this plant and machinery. When you purchase this plant and machinery or computer or any asset, let's say this is taxable value and this is tax. How much is the value? Total value 11 lakh. Now, what can be the two options? There can be two options, sir. Either I will capitalize 10 lakh or I will capitalize 11 lakh. That is correct now. There can be two possibilities. What is the meaning of capitalization? It means you will debit the asset account. In this, you will debit the asset account by rupees 10 lakh and here you will debit the asset account by rupees 11 lakh. Correct now? Here you will debit the asset account as 10 lakh. Here you will debit the asset account as 11 lakh. Karthik, these are the two possibilities. If you will capitalize 10 lakh, then how much you will calculate the depreciation? On 10 lakh only. If you will capitalize on 11 lakh, calculate the depreciation 11 lakh. My point is here whether you're taking the depreciation on 1 lakh also. Are you taking the depreciation on 1 lakh also? No, sir. Then they are saying you can take the ITC of 1 lakh. See, I have purchased the asset of 10 lakh by charging on which GST is being charged 1 lakh. The total invoice value is 11 lakh. I have paid 11 lakh. There is two possibility. Possibility number one, I will capitalize 10 lakh. Or possibility number two, I will capitalize 11 lakh. If I ask what could be the accounting entry, let's say I am asking what could be the accounting entry. I will say here in this case, I will debit the fixed asset account by rupees 10 lakh. I will take the ITC of rupees 1 lakh and I will credit the supplier by rupees 11 lakh or I will credit the bank account by 11 lakh. If I will see that I am capitalizing 11 lakh, then what could be the accounting entry? Asset account debit 11 lakh and to supplier or bank 11 lakh. Accounting entry is clear? Yes. Answer is also given in the accounting entry. 16 subsection 3 says if you will capitalize entire value including GST, you cannot take the ITC. If you will capitalize only basic value, you can take the ITC. That's it. Is it clear? Karthik, now confirm. Thank you so much, Susil, for your appreciation. Karthik and everyone, is it clear? The concept of 16.3 is clear or not? Karthik and everyone. So if I will take some more time to explain the previous doubt, you need to allow me extra time. You all need to allow me some 5 or 10 minutes extra time because I will 100% take the quick round of the question answer. So you are saying, let's say I'm going to the page number. What, sir? That's what I wanted to say when I said it's not capitalized. Okay. Yes, sir. So question is now, Prabhas, you and me both are in same page now. Now, whatever you are like to say and whatever I am explaining is both are okay, or still there is any doubt? Is it okay, right, Prabhas? Uh, 16 to see, you are seeing page number 20. Six point 20. Which line you are seeing here? Okay, this part you are saying, Karthik. I think you are talking about ITC on the taxpayer take the provisional ITC on self-assessment basis in 3B for discharging the liability. I hope you are saying this line. What is the meaning of this line? Is it? Fine. See, there is a provision in the GST section 41. See, 16(2)(c) is talking about the transaction, the tax has been paid by the supplier, correct? The taxes has been paid by the supplier. But if the transaction is coming in the 2B, so you are supplier, I am customer. Assume that you are supplier, I am customer. You are making the supply to me. Okay, you have filed the GSTR1. It will appear in my 2A and 2B. I am taking the ITC. Whether GSTR2B is a proof that you have paid the taxes? No. I know, sir, GSTR2B is appearing on the basis of the supplier GSTR1. And by which return we are paying the taxes? We are paying the taxes through GSTR3B. Repeating again, there is a one problem with 16(2)(c) that we cannot assure that whether tax has been paid by Karthik or not. Suppose I am purchasing the goods from Karthik. Karthik has issued the tax invoice. Karthik has filed the GSTR1. It appears in my 2A, 2B, but it is not the proof that Karthik has paid the taxes, because Karthik will pay through 3B and there is no communication of 3B to me as of now in the government portal. So they are saying Arun will take the ITC, whatever the ITC is, the provisional ITC, the word provisional ITC. You can also see the section 41 to have the more clarity. On self-assessment basis, because I am determining my eligibility at my own. 16(2)(c), it is not confirmed by the portal. Therefore, they are saying whatever the ITC I am taking, that is provisionally calculated on self-assessment basis. As of now, they are not calculating. Portal is not calculating. I hope it is clear. Kindly confirm. I hope it is clear. Kindly confirm. How many doubt you have? 16(3) is clear. Yes, you can extend. It will be late doubts. First, please explain third provision of 16(2). Third provision of 16(2) and rule 36 sub rule 3. What is the doubt? You just want to explain me. Rule 36 say that if something is fraud, willful misstatement, then obviously ITC is blocked. See, one is involving issuing the fake invoicing, etc. Obviously, the ITC would be denied. If Mr. A has issued the fake invoice to Mr. B, Mr. B is taking the ITC. They are saying no ITC shall be available in respect of any taxes paid in pursuance of any order where a demand has been confirmed on account of the fraud, willful misstatement, etc. So that is the fraud or ITC not available. Simple. Now the last point, 16.2, third proviso. A recipient shall be entitled to avail the credit of input tax on payment made on amount toward the value of the goods along with taxes payable thereon. See, there is a concept of, see, whatever we have discussed, claim, reverse, and reclaim. See, first you claim once you satisfied all the condition of 16.1 and 2. You will reverse if you will not make the payment within 180 days. That is written in the second proviso also. That is also written in the rule 37. Correct. So here I can say 16.2 second proviso. You can reclaim whenever I will make the payment. Whenever I will make the payment, I can reclaim. Where it is written 16.2 third proviso and read rule 37. So let me move to the rule 37 also. You will have the crystal clarity. So rule 37, last. See, time limit is specified in 16.4, September or annual return, whichever is earlier, shall not be applied to the re-availment of ITC. Okay. And that is failed to pay 180 days. I hope it is clear. Kindly confirm. Karthik. So that claim, reverse, reclaim, you can say 16.2 read with rule 37. It is talking about that you first claim, then reverse because of 180 days. The things 180 days is written in 16.2 second proviso as well as in rule 37. And whatever reverse you can reclaim when you are making the payment. Where it is written 16.2 third proviso and rule 37 sub rule 4 says no time limit is applicable. Kindly confirm. I hope it is everything is done from my side for today class. Now I'm going to start the quick question answer. We'll have 10-minute question answer. We'll at least have 10 minutes. Supply the goods and services are according to 18.1. Then after expiry the 1 year ITC not available. Na, sir? Yes, right, absolutely correct. They are keeping the time limit only 1 year. Okay. Karthik, I hope everything is clear. Fine. So we are starting with the. So today what we have discussed section 18 and rule 40, 41, 41A and 44. Correct. So let me ask first question. What is the final return in case of the closure of the business? What is the name of the final return? Form number? Quickly answer. Quickly answer. GSTR 10. Second question. In case of the rule 40, life is 5% per quarter or something. So let's say I have used the asset. Say I'm asking 40 and 44. I have used the asset for let's say 1 year, 3 months, 2 days. 1 year, 3 months, 2 days. 1 year, 3 months, 2 days. You will write somewhere. Give the answer. Take your time, no problem, but you will give the right answer. I'm saying 1 year, 2 months, 3 days. 1 year, 3 months, 2 days. Sorry, 1 year, 3 months, 2 days. If I will apply the rule 40, how much percentage I will deduct? How much percentage I will deduct? I have used the asset for 1 year, 3 months, 2 days. Please tell me 1 year, 3 months, 2 days. Please tell me, I will assume that if I will apply the rule 40, how much percentage I will reduce? If I'm saying the asset is being used for 1 year, 3 months, 2 days. 1 year, 3 months, 2 days. then how much percentage I have reduced. So I have sold the capital goods or plant and machinery after this particular 1 year, 3 months and 2 days. How much percentage I have reduced? I have reduced. For 1 year, this is 4 quarter. For 3 months, 1 quarter. For 2 days, 1 quarter. So 4, 1 and 1. So total 6 quarter, I have to reduce 30%. For 1 year, 20%, for 1 quarter, 5%, 25, and for even 2 days, it will be assumed full quarter. So you will reduce 40%. Sorry, 30% for 4 quarter, 1 quarter, 1 quarter, 6 quarter, 30%. Is it okay? Perfect, perfect, perfect. Thank you so much, Akash Nila. Very excellent. Suppose this I am using the rule 44. I am saying I am using the rule 44, and rule 44 also saying 18.6, and rule 40 is also saying section 18 subsection 6. Both are linked with the section 18.6. So if I will apply the rule 40, if I will apply the rule 44, how much is the remaining life? How much is the remaining life in this case? How much is the remaining life in this case? Purnima, 6 quarter multiplied by 5%, because even 2 days would be considered as a full quarter. One year, 3 months, 2 days. What is the remaining useful life if I will apply the rule 44? One year, 12 months, 3 months, 15 months, and 1 or 2 days is also considered to be 1 month. So total is 16 months minus 50. I can say 34 is the remaining. 34 month is the remaining useful life. 1 year, 12 months, then 3 months, it means 15 months, and 2 more days, it is considered equivalent to the 1 month. So 12 plus 3 plus 1, 12 plus 3 plus 1, total month is 16. What is the life of the capital asset according to the rule 44? What is the life of the capital asset? 5 years, 60 months. 60 minus 16. So the remaining useful life is 34 months. Is it okay? The remaining useful life is the 34 months. Is it okay? Please confirm. Next question. Next question. If the value is different in the rule 40 and rule 44, is the values different? I will take higher of both value or lower of the both value. I will take higher of both or lower of both. I will take higher or lower. The right answer is higher. The right answer is higher. Can you tell me if in case of the death of the proprietor, can you tell me 60 minus 16, 44? Okay, fine. Sorry. This is my mistake. 60 minus 16, 44. This is my mistake. Fine. This is my mistake. You can treat the 44 instead of 34. Calculation mistake. So there is two different value. Then you will take lower or higher. The answer is higher. Third question. In case of the death of the proprietor, ITC can be transferred by which form? ITC can be transferred by which form? Quickly tell me. ITC can be transferred by which form? ITC can be transferred by which form? ITC can be transferred by which form? Answer is ITC 02. ITC 02. Can you tell me what is the ITC 02A? What is the ITC 02A? What is the ITC 02A? Can anybody tell me what is the ITC 02A? What is the ITC 02A? Can you tell me what is the ITC 02A? Can you tell me what is the ITC 02A? Can you tell me what is the ITC 02A? For separate registration in same state, if you are transferring the ITC. For separate registration in the same state, if you are transferring the ITC, you will use ITC 02A. Excellent. Couple of question quick. In case of mandatory registration, will I be allowed to take the ITC of capital goods? Will I be allowed to take the ITC of the capital goods? Ankur, no problem. I just trying to revise my discussion. Whatever to the extent you can remember, that is okay. Otherwise, leave it, no problem. This form number itself is not too much mandatory. My question is, in case of the mandatory registration, can you take the ITC of the capital goods lying in your stock? Answer is no, not at all. No, not at all. Correct. In case of the, in which two cases I can take the ITC of capital goods also? In which two cases I can take the ITC of capital goods also? In which two cases I am allowed to take the ITC of capital goods also? Two more minutes we have. Ram sir, we have only 2 more minutes. Okay. I'm sorry for delay, but I will complete the discussion in 2 more minutes. In which two cases you are allowed to take the ITC of capital goods also? I'm talking about section 18, ITC in case of special circumstances. In which two cases you are allowed to take the ITC of capital goods as well? Great. Composition, 2 regular, or section 10 become 9, that is same. And second thing, yes, exempt become taxable. Great. Exempt become taxable. Last question for the day. In case of the supply of the capital goods, I have to compare two value and I have to pay the GST whichever is higher. Can you tell me what is the two value? In case of the section 18 subsection 6, supply the capital goods, I have to compare two value, whichever is higher I need to pay the GST. Can you tell me what is the two value? Value number 1 and value number 2, and whichever is higher I will pay the taxes to the government. That is my last question. That's it. Repeating the question once again, section 18 subsection 6 talks about if I am supplying the capital goods or plant and machinery on which I have taken the ITC. Now I have to compare two value, and whichever is higher I need to pay the GST to the government. Please tell me these two value which I need to compare, and then higher of the two have to pay the GST. This is my last question. Requesting everyone to give the reply. Oh, thank you so much, Miss Amritpal. Somesh, Sneha, yeah, great. Right answer is transaction value, whatever the tax is payable on the transaction value, or with whatever the ITC you have taken reduced by certain percentage point. Now here I will apply the rule 40 by reducing 5% per quarter or part thereof. Also I will apply the rule 44, and here whatever the highest value is there, I will pay that amount. Thank you so much. Thank you so much for your lovely participation. We'll meet in the next class, that is last class of the ITC. Ensure to revise entire ITC, because probably in the last class I will have this quick round of the question for longer period. I cannot say what is the period, maybe 20 minutes, maybe 15 minutes, maybe 30 minutes, but yes, I will take longer round of the question answer. So please ensure to complete all the point which we have discussed in the ITC, and also we will try to complete some practical question. Thank you very much. Good night to all of you. Ram sir, we can class is being concluded from my side.